Good evening, all. Today we're looking at Chegg stock, baby. Told you we were waiting on looking at Chegg stock. Obviously a little bit late getting home, but you know what? No worries here. We still got time to look at Chegg. Still time to post this video today. We're gonna have a great time. You see the response to these earnings, a 5% increase nearly after hours. So you're expecting some pretty decent results out of this company to bring a 5% number. Was a little bit higher. Right after close, you saw a jump of around 8% nearly. Obviously, I do like to put this stuff in context. Over the last year, what Chegg has done, it's been able to increase 128% over the last freaking year. The stock's been on a tear, and I don't think there's any other way to explain it. I mean, when you're doubling your stock price in a year, you've done some good stuff. Okay, so let's take a look at these earnings. Get right into this bad boy. So Chegg goes ahead and puts a non-GAAP EPS number of 55 cents, which is beat by 6 cents, and a GAAP EPS of 18 cents, beat by 1 cent. Now, again, this line is important for many reasons. Chegg is a company that's finally building themselves into this profitability standpoint, which they didn't have before. So it is really exciting to see some GAAP profitability on this aspect and see if they can maybe develop an actual PE ratio for this company and get some better valuation potentially. We'll see what that looks like, but really cool to see a beat on there. And a revenue line of $205.72 billion, which is an increase of 64% year over year, beats by 16 million. It's a pretty darn good beat. And again, you look at the percentage, it's a fairly high percentage, but in consideration, when you think about the fact that we're only dealing with hundreds of millions versus companies that, bring billions of revenue, it is worth noting that obviously a 64% increase when you're talking about $1 billion is a lot more impressive than when you're talking about 200 million. So, but still, it's a really impressive growth there and what they're able to do, and a good beat too. Chegg service subscribers came in at 4.4 million, which is up 74% year over year versus a consensus of 3.83. I mean, that's an incredible beat on that aspect. You're talking about 600,000 more people on this service than what was expected on the consensus. That's some darn good numbers right there. I mean, I'm impressed. I'm freaking impressed. So we got the press release we're going to look at, as we love to do. You know what? We're going to do it. So Chegg Services revenue grew 64% to 176 million, which was 86% of total revenues. Obviously, see where the majority of this comes. Net income came in at 26 million, which is pretty good for them. Pretty good line for them to see an actual positive net income line. I like seeing that out of these up-and-coming companies. You love seeing it. Obviously, we saw the subscriber number, but we saw also 476 million total Chegg study content views. 476 million content views in the fourth quarter of last year. So a lot of people were using this service, not necessarily paying, but they were using the free portion of it to view some of this content to help them out in terms of studying. So when you talk about that, you see some revenue in terms of ads as well that this company uses. So they find ways to get money even if you're not paying for the services, okay? From the full year, they're giving you the full year. Revenue came at 644 million, which is an increase of 57% year over year. Pretty good stuff. Chegg Services grew 57%, 81% of revenue. Overall, though, net loss on the year came in at 6.2 million. So again, really good Q4, but overall, you can tell from what they were doing previously, and that's what I talked about, the lack of profitability, they still had a net loss of $6.2 million. So again, you'd like to see next year them develop that into a profitability line. I'm really hoping they can. It'll go a lot of way for this stock. I've never been more tired in my life. I'm gonna tell you that right now. For the full year, they added 6.6 million Chegg subscribers. That's, I mean, obviously you think about Q4. I told you in my analysis how much I think Q4 is going to be a smasher compared to the others, but you know what? Not everyone wanted to agree. 1.3 billion Chegg study content views. We're in again 25%, or I am lying to you. 33% of that was just in Q4 alone. So I told you Q4 is going to be big. So no doubt, but obviously other ways in terms of these services includes Chegg Study, Writing, Math Solver, Study Pack, Thinkful, and Mathway. And then obviously you have the required materials segment as well, which includes textbooks and ebooks. So pretty cool. As far as an outlook's concerned, they're expecting revenue in the first quarter to be between 182 and 185. I think this is quite feasible for them. Again, you talk about where this company's going, and obviously the future of learning, where it's at in terms of this digital standpoint, and a lot more people are going to need help with a company like Chegg. I think that's a very decent revenue estimate there, so the guidance is looking pretty good. Personally, I think it's pretty good. Gross margin between 65 to 66%. The adjusted EBITDA line, not too excited about. They're expecting 48 million here. I don't know about that. I don't know if I agree with that. It's not that exciting because again, that's the adjusted line. And you look at the adjusted line from this quarter, obviously came in at 87.9 million. Yet they only brought in 26 million. So you would assume likely this first quarter is going to be a negative earning quarter in terms of a net income line. So that's my opinion on the matter. Because again, you saw an adjusted EBITDA for the full year of 207 million, but a net loss of 6.2 million. So this adjusted number obviously inflates it quite a bit there. So expect a net loss probably for the first quarter here is what it looks like from their from what they're giving. Total net revenues for the full year, they're expecting 780 to 790 million, which is pretty nice. Expecting 30.5% of that to come in Q4, as I mentioned. Q4, big stuff. Adjusted EBITDA for the full year coming in at 265 to 270 million, which obviously would be pretty good year over year in terms of that growth, where they could, instead of for the full year came in at 207 million, they could bring it in at 265 to 270. That'd be quite the improvement. Probably would be a positive net income line for the year, which would be incredibly the first time they've ever done it. So that's really it as far as this press release. Nothing super crazy. We will look at the balance sheet, obviously, as we do with these companies, and I'm not going to fall asleep because you know what? These numbers get me excited, and I don't fall asleep, okay? I'm not going to do it. Year-over-year comparison, I love it. So we're looking at a total current asset line at $1.1 billion, which compares to a year ago sitting at $807 million. So definitely some improvement there. We can't lie. Good bump of nearly $400 million there, which is nice. A lot of that obviously is an improvement in terms of short-term investments. Just see a lot more of that on the balance sheet. Total assets in general of 2.2 billion compared to 1.5 billion. So a nice another little jump there as well. Some of the benefits here being long-term investments as well. So short-term and long-term investments took a bump in this balance sheet, which is good to see. From a liability standpoint, we see total current liabilities sitting at 109 million compared to 71 million. Again, one thing you really can notice on this company, really not a lot of short-term debt at all. It's really impressive how they're able to do that. That's pretty darn nice in that aspect. I really do like seeing that. Now, where they do have some issues is you'll see in the long-term category, these convertible senior notes. Total long-term liabilities ending up at 1.5 billion. So they have 1.4 billion dollars worth of crap here. That comes from obviously convertible senior notes that they obviously did to raise capital. Again, this stuff will expire eventually over the next coming years, but they should have the cash ideally by then to pay for it. It leaves a total liability line of 1.64 billion, and overall leads to a stockholder equity sitting at 609 billion. Whoa, no, they wish. 609 million compared to 498 million of the year prior. So a good growth there, right around 110 $110 million on this balance sheet, which is pretty nice. Well, really, the balance sheet as a whole grew massively, but in terms of an equity line, $110 million. But really, this balance sheet's in a lot better shape than what it was. Obviously, you see the convertible senior notes, which you don't necessarily like, but again, these aren't necessarily all expiring at the same time. They are spread out, and they should be able to pay these back by the time they're due. So you do need to consider that with this company. Valuation-wise, again, we saw a total revenue line right around $600 million. The company is trading at $13 billion in terms of that market cap, and without profitability, people might say it's a little bit rich. I don't think it's crazy, but it is trading around a 25 times multiple there. Without profitability, might scare some investors away. I don't dislike the stock at these levels. Obviously, I think the company's got a lot of room to grow and will continue to grow and be obviously the forefront of this. This is a company that's very well known by people, and it'll continue to be the go-to source for this type of stuff in the future as well. So Chegg, doing really good stuff. If you want to invest in it, I wouldn't, I couldn't blame you at this point in terms of a long-term investment standpoint, though. So just be weary of that, and overall, hope you have a great day.